Welcome to Business Live. I'm Mark Croskery. In BL tonight, first up, we got Fesco, that's Future Energy Source Company Limited, trading in their shares here. We've been seeing a lot of buying happening in the company from connected parties, directors, senior managers. In this case, advisory by Fesco that the director sold 21,420 shares on August 18, 2022. Next up, we got Mayberry Jamaican Equities Limited. That's ticker symbol MJE. Don't mix it up with Mayberry Investments. That's the investment bank or the securities dealer. In MJE's case, this is an updated net asset value. That's a NAV. It remains here below $17 Jamaican per share. It closed at Jamaican 16.37 per share as at August 22nd, 2022. Now, one of Jamaica's largest commercial banks, just overall financial groups, that's Sagicor Group Jamaica Limited, traded in their shares. Quite a big one here, or a material trade announced to the Jamaica Stock Exchange. That's a JSE. Advisory that a director sold a total of just under 1 million shares, 948,999 shares in Sagicor Group Jamaica on August 17th, 2022. Now that takes us to overseas markets, international markets, US markets here. A little bit of bad news here. 3 down days on the US markets, especially the Dow Jones, S&P 500. Dow Jones Industrial Average falling back or taking back some of those gains 3 days in a row, pulling back below 33,000 points here, breaking the summer rally, as a lot of US analysts say, hitting a 3-day losing streak as the Dow Jones has continued lower. Bottom line here for today, dropping 154.02 points or 0.47% to close 32,909 points. Some of the big losers, Zoom video shares falling by as much as 16.5%. And big concerns here, this is a whole inflation interest rate dilemma. US 10-year treasury yields rising above 3% there. That could get worse. That's going to bring a lot of concerns in the capital markets, bond markets, and so forth. Last up, we got big department store retailer here, Nordstrom, another company, and this is creating a lot of concerns as well, cutting its full year forecast despite coming out with pretty good second quarter earnings. We'll get to that. The department chain cites that it's facing a surplus, huge amount of inventory, a glut of inventory, and citing slower customer demand, slashing its full year forecast as a result, despite, as we said, a pretty decent fair second quarter numbers or results. And it's just concerned overall, Nordstrom states, with customer discretionary spending being lower and just a whole outlook there. Bottom line, Nordstrom revises numbers, annual sales by, let's say, up 5 to 7% versus what it said before, up 6 to 8%. You know, either which way, a swing of a percent there. And adjusted earnings per share, EPS, US $2.30 to US $2.60 versus US $3.20 to US $3.50. We'll see what happens, but the bottom line is a lot of US companies are slashing their full year financial forecast, especially in retail. I'm Mark Croskery. Have a great evening. This is Business Live.